A great company is not a great investment if you pay too much for the stock. That is from a man known as the Dean of Wall Street, Benjamin Graham, legendary investor. And Mr. Graham is exactly correct. Doesn't it madden you when you run into people and you tell them that you are into stock charting and then they, oh, well, I'm a value investor. Like somehow paying too much for something is okay if it's a good company. No. I want good companies, of course, and at the same time, I want to buy it at the right price. That's what stock charting allows you to do. That's what we talk about here every day. What we teach you going through the charts that we review, and of course, we look at 500 companies in the S&P 500 every day. We look at all the companies in the Nasdaq, the tech stocks. We look at 20-year bonds, and we look at gold. And again, what are we trying to do? We want to make sure that we buy at the right time, that we sell at the right time, and the stock charts allow us to see that. We talk about paying attention to the signal and not the noise. Paying attention to what's really going on, and the signal, folks, is price. You can sit and watch CNBC and Bloomberg. You can read the Wall Street Journal and Forbes and Investor Business Daily and all these publications and all of these folks that are trying to give you information about what's going on. But what really matters? What's the truth? The truth, my friends, is the price movement. That's what the truth is. That's what you need to follow. That's what we teach you how to see. That's why what we do is so valuable. And for the tens of thousands of you that tune in to us every single week, every single day, we appreciate you being here with us. We are dedicated to bringing you the truth as seen in price movements. If you don't have our book, buy it. It's available in the show notes. If you live overseas, email us, cw@chartingwealth.com. I'll send you a PayPal invoice. We're selling these books, are going out the door by the boxfuls every day. You cannot buy this online. It is not available digitally. It is available from us and us alone, Charting Your Way to Wealth. If you want to support what we do also, you can be a Patreon supporter. Great gifts, great things for our Patreon supporters. I do need Patreon supporters to pay attention. I need from you. I very much need to hear from you on the stocks and ETFs you would like us to look at for you this month. And we also have another training coming up for you. It's actually going to be our live call-in show for our Patreon members at any level. That's going to be at 12:30 Eastern Daylight Time on Wednesday, June the 5th. So go ahead and mark your calendars for that. We'll send out the invites to all of our members. We'll have you there for that live Q&A teleconference for all of our Patreon supporters. Now let's jump into the charts. We see down for the day, strong, the S&P 500, 1.22%. What do we see when we tune in and look at the price movement on the candle? Very close to getting to a crossing over one more day. If Friday's a down day, then I have a feeling that we're going to have a weekly vertical crossover. Those of you who've signed up for our text service, we will let you know. If you live overseas, I'm sorry, text service doesn't allow you to get notice overseas, but all you have to do is pay attention and watch our comprehensive review and forecast that we record every Friday. If you live in the States and want to have that text service sent to you for free, then of course you just text to the number 33222 on your cell phone, the word Charting Wealth. No space between charting and wealth, just Charting Wealth. You want the full instructions on that, look in the show notes. You can see those in anything we put out at our YouTube channel, in our podcast, and of course there at chartingwealth.com. Make sure you do subscribe also to our daily review, which includes our weekly review and forecast, where we announce all those weekly vertical crossovers. It is the main thing we are looking for. If we do have this crossover, what does it mean? It means when the markets open on Tuesday, remember, Memorial Day weekend's coming up here in the States. Markets won't be open on Monday, but they'll be opening on Tuesday. If we have this weekly vertical crossover, we'll be looking in for a jumping in point potentially Monday morning or Monday afternoon. We'll talk more about that if indeed that occurs. Have a down candle now, something to pay attention to. The wick on the bottom of this week's candle, one more day for that candle to form, hasn't gone as low as the prior week, so there's been some slowing in the dropping of price movement. We do, however, the all-important price percent oscillator appears at this point to be crossing over. We don't call a candle until it's fully drawn. That won't happen until the close of business on Friday. Derivative oscillator also appears to be crossing over, going down. It can bounce off that and just stop, but we'll see what happens. Now, Wednesday and Thursday are represented by the latest 2-day candle. That is a red spinning top, means indecision tending down. Still got a wick on the top. It's not a strong red down candle like we saw those 3 2-day candles from the 9th through the 15th of May. All that strong down movement. Things slid sideways, but might be starting to move down again strongly. Appears that way with the price percent oscillator moving over, going down. Derivative oscillators losing some downward momentum. We go to the 4-hour chart, and of course crossed over in the morning, followed by more down movement in the afternoon. I did have a student ask that if that 4-hour chart crosses over, the 2-hour chart's already crossed over. The weekly chart might be crossing over. Could I go ahead and jump in after that 4-hour candle crosses over before the weekly's confirmed? And of course, I don't discourage you from practicing things. However, the problem is we have seen things bounce off the red signal line and not be a crossover and then bounce off and head up. So until we have confirmation of the crossover, I don't do it. I'm not going to do a trade without obeying the commands. Why? Because they work. We also see that where things bounce down to last around 282.11, again, things are around the 281.65. Let's see, are we looking at that correctly? I'm just trying to look. 181, yeah. So we've still got about 50 cents or so to go before we really bottom out to where things were before, see if we see a punch through there. So again, did have that crossover in the morning on the 4-hour chart, but until we have a weekly vertical crossover confirmed at the end of the day on Friday, I'm not looking at jumping into anything. And if that doesn't happen on Friday, then I'm just going to be patient. I'm going to follow the rules. And you say, why do you follow the rules, Tom? Because the rules work almost all the time. We can look back in time and see where they work. And trying to, oh gosh, we saw this happen, did we not, friends? We look back in July. The beginning of July 2018 looked like we were going to have a crossover for a couple of weeks. And what happened? Instead of crossing over, it bounced off the red signal line and headed up. You would have gotten screwed if you would have jumped in to a down move thinking that's what was going to occur and you were going to beat the rush. So again, follow the rules. Why? The rules work. Okay, we're going from the S&P 500 to the Nasdaq 100. We affectionately call it the Qs. Down 1.53%. We can see a nice strong down candle, the wick actually going below the prior week's wick, and a nice, pretty strong crossover so far. It could have a pullback. Might not be confirmed by the end of the day on Friday, but might be. We'll see if that happens. We'll call it. We do see the derivative oscillator also crossing over and gaining momentum. We go from the weekly to the 2-day, and after that sideways slide for 8 days, this latest candle did punch down and heading down quite strongly and nicely. Price percent oscillator also moved over a little bit further down, and it looks like the derivative oscillator might have lost a little bit of energy, might just sort of be where it was on the prior 2-day candle. We look at the 4-hour chart. Big down movement in the morning, followed by a little bit more down movement in the afternoon. Derivative oscillator gaining downward momentum. Price percent oscillator crossing over in the morning, heading down on that 4-hour chart. So again, and it's also punched through where it had landed before, back at about 178.83. So that's good to see. And again, the low for the day was achieved at about 177.14. 15. So again, quite nice as we look at the cues. Hopefully we will have confirmed weekly vertical crossover by the end of the day on Friday, give us a potential for jumping in to a down move this next week. Now, just so you're aware, if you've not already listened to Inverse Funds, How to Make Money When Markets Crash, I think it's Inverse ETFs, How to Make Money When Markets Crash. If you're looking to short the Nasdaq 100 or the S&P 500, if you just want to do a simple short, which again moves the opposite of the way that the underlying security moves, I'd like you to practice. And again, we're not a stock calling service, we're not giving investment advice, but PSQ is one. That's the ProShares Short QQQ ETF. And of course, it goes up when the Qs goes down. Just a little bit of sophistication. You don't have to do anything like this. You can just practice pulling out. Well, you should not have been in for the last couple of weeks as things were sliding sideways and down. We wait until we have actual confirmed moves to jump in, and then we stay in when we have confirmation keeping us in. Well, that ended a few weeks ago. We've not been in to either one of these, but jumping in prematurely can really get you stung. We don't want to do that, but when we're always happy to just pull out, wait for things to bottom out and jump back in. But if you want to practice shorting, I encourage you to consider PSQ for a practice trade. Also on the S&P 500, you have the ProShares Short Standard & Poor's 500 ETF. You also have leveraged funds. These just move 1-to-1. Others move 2-to-1, 3-to-1. But again, just want you to get a feel for how these work. I typically use the underlying security to make my decisions. You can, of course, switch over to these charts if you wish to, if you jump into an inverse fund. Not a bad thing to do, but just to keep it simple at the channel, we stay with QQQ and PSQ, even when things are moving down in negatives. I don't want to confuse people going to the short fund. So let's go to 20-year bonds and talk about where they are. Up 1.12% for the day. You would expect a big down day on the market to cause bonds to go up. Bonds are typically a safe haven where money goes when stocks are going down, and that is exactly what happened. We see, and here's another, looked like bonds were going to cross over going down. Never had confirmation. What did they do? They bounced off the red signal line. If you'd have jumped in thinking you knew more than our method did, you would have gotten screwed because it turned right around and bounced off. Again, we follow our rules because our rules typically work. And isn't this a whole lot simpler than all the other stuff that people try to teach you? We have honed this down to make it as simple and as accurate as we possibly can and easy to understand so that you don't look at this and say, well, it's just too hard for me to do. I'm going to leave it to the experts. I'm just going to, what? Leave your money in a passbook savings account and make nothing on it? Again, we want you to train with us, learn how to do this, get good at it. And then and only then would you ever consider using what you learn from us and everywhere else to help you make investment decisions with your own money. That's for you to decide. And the only way you're even going to get close to even trying to make that decision is to be with us 10 to 15 minutes each and every day. And I assure you, my friends, you can learn to do this. Some of the best people I know that are successful investors, they have high school educations. You don't have to have a PhD. You don't have to have an MBA. You don't have to have a law degree. You just have to be dedicated. Okay, what do we see going on? Third week of strong up movement we seem to be going into. Derivative oscillator gaining upward momentum. Price percent oscillator spiking up quite nicely for the week. We go from the weekly to the 2-day. What do we see there? Well, this latest 2-day chart, look at that huge wick on top, a big green up candle, one of the bigger candles we've seen lately. And of course, the price percent oscillator spiking over, going up, derivative oscillator gaining upward momentum, looking quite nice. We go to the 4-hour chart. What do we see there? Big up movement in the morning, followed by big up movement in the afternoon. And of course, what were we telling you to look for? We were telling you to look for a crossover going up. Why? Because the 2-day chart was already heading up. The weekly chart was already heading up. We were waiting for that pullback on the 4-hour chart, and it happened. Popped up in the morning. You had a jumping in point in the afternoon. How many of you watched that, tuned in at noon, and decided to jump in. Now, we gave you the warnings. This is long, long, long in the tooth. God, we had the crossover going all the way back to November of last year. If we go for, God, we got to go way back. Look at that. Bonds have been moving up and sideways all the way since November of last year, the end of November of last year. Amazing. And again, continued to spike up. So we were standing by, ready to jump into that latest one, but they are getting long in the tooth. But guess what? Stocks continue to pound down. You might see bonds just keep going up. So hopefully some of you did a practice trade on that one. We'll see how that turns out for us. I'm always concerned when we get that long in the tooth on a move. But hey, markets can trend up, 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 up. Some point it ends. But again, we work to call those. All right, we're going to go from bonds to gold. Gold up 0.77%. What do we see happening with gold? Well, gold's been sliding sideways for quite a while, hasn't it? And we have been waiting to see if after this big downturn where gold bottomed out at a low of 119.55, what gold was going to do. Well, it sort of popped up and has slid around since then. Closed the day 121.17. You know, we'd had a nice down day the day before, but with stocks going down, gold again is typically a safe haven when the markets aren't doing well historically. And what do we see so far for the week? Well, we can see that we've got with that up movement for the day, it's generated quite a nice long tail or wick on it. Derivative oscillators losing downward momentum. Price percent oscillator still heading down, but not as strongly as it had been. We go to the 2-day chart. What do we see there? We see a green spinning top after 2 candles of strong down movement. Looked like we were going to have a crossover going down so close, but it didn't happen with all the up movement for the day. That ended up giving us a green candle, a green spinning top for this 2-day movement. Derivative oscillator losing momentum. Price percent oscillator just edging up and away from the red signal line. No crossover going down. 4-hour chart, very close to crossing over. Doesn't have enough momentum yet to cross over on the price percent oscillator. If there's an up day in gold on Friday, might have that. But again, we still have that 2-day chart is of course still up, but that weekly chart still in a confirmed down move. So we'll see how gold shakes out for us. That's where we are, folks, as we end the day on Thursday, go into Friday. Again, those of you in the States want to get that texting service, be sure to text to 33222 on your cell phones, the word Charting Wealth, one word. Again, want more on those instructions? Look in the show notes attached with everything we put out, and make sure you subscribe at chartingwealth.com. That's where we put all of our great training. When it first comes out, you're going to get it if you are a subscriber. And when you're at YouTube, go ahead and hit that subscribe button too. If you're watching the video, look in the bottom right-hand corner, subscribe. You'll get everything as we upload it. You'll be notified of that as a subscriber. And we so appreciate all of you being with us. You have questions, problems, concerns, email us, cw@chartingwealth.com. Buy our book, be a Patreon supporter. Let us hear from you. And remember, keep the faith, my friends. We want you to have great success in the marketplace. And it comes through spending 10 to 15 minutes a day with us. God bless you, my friends. All the best from the whole team here at Charting Wealth World Headquarters.